Endurance Tech has reported a better than expected performance during the second quarter of FY21, and that's post the unlock phase. Now, in our ideas for profit today, we'll discuss if the stock merits investors' attention post the earnings and at the current valuations. Now, in Q2 FY21, Endurance Technologies' net revenue fell merely by 1.6% year on year as major original equipment manufacturers or OEMs across segments ramped up production, and that's post the unlock phase. Now, India business revenue declined 2.4% year on year, while the Europe business revenue grew 0.4% on a year-on-year basis. Its EBITDA has declined 2%, with the margin remaining largely flat as compared to the same quarter of last year. Now, India business EBITDA margin expanded by 100 basis points, whereas the Europe business margin contracted by 290 basis points. This contraction in Europe business margin was actually led by the adverse product mix and also the inventory correction. Though COVID-19 triggered a massive disruption, the two-wheeler segment has seen a V-shaped recovery in demand after the process of unlock phase has started, and that's because the demand recovery is fueled by people's preference for personal vehicles in the wake of the COVID-19 pandemic because of the perceived risk of getting infected. The company generates most of its revenue from this segment, and it has a very strong positioning on the back of its technologically advanced product range that it has. Now, it is therefore the best proxy to play the growth in the two-wheeler segment for sure. Now, the company is expected to outperform the industry by acquiring even new clients and increasing its share of wallet from the existing clients going forward from here. It has acquired new businesses worth 360 crore rupees per annum in H1 for the India business, and from Yamaha, it is expected to increase to 350 crore rupees in FY22 from 210 crore rupees back in FY20. Further, the management has indicated that the OEM schedule is robust, as is evident from the 34.5% year-on-year growth in the India business revenue seen in the month of October 2020. Moreover, Endurance Tech has also won a business worth 10.8 million euros in H1 from Audi and from Maserati and the like. Strong order wins also give the company earnings visibility in the near to medium term as well. Now, the management is focusing on even cost efficiencies, higher value-added products, and even import substitution to improve the operating margin that it currently has. The company has acquired two companies to get the required technology and the capabilities also to make new products going forward. Now, its focus areas include clutch assemblies and also brakes, and that's for the ABS system. The company has already carried out backward integration into the aluminium forging axle clamp for the front fork, the wire grade hoses for ABS brakes. All of this will aid in improving the operating margins going forward from here. Now, in order to meet new customers' demand, the company has been also expanding its capacity in the current times. Company is also trading at, or the stock is trading at 23.1 times FY22 projected earnings. Now, this is at a discount of 27.8% to the 5-year average of 32 times. Now, while this valuation also may still seem quite expensive, it is still justified given the company's stellar financial track record that we have witnessed in the past. Investors can therefore look to accumulate the stock in a staggered fashion.